Evil villain laugh out of nowhere.
Hey everybody, if you watched our first video, thanks a lot. If you haven't, just to let you know who we are, I am an investor that knows nothing at all, and Danny's the one that knows it all. So hopefully through our discussions, you'll be able to learn a little bit more about stocks. In this video, we're going to talk about the fundamentals of a stock, analyzing a stock. Something to keep in mind, I think, when you're starting to invest is to invest in something that you understand, A, and B, something you like. Does that sound like sound advice?
Definitely it is. Warren Buffett's a guy that's always said it. He doesn't invest in companies he doesn't understand. That's why we will look now at Twitter and Snapchat in particular, because I feel like most of the people that are on YouTube using their computers are familiar with Twitter and Snapchat and how they offer their product and make money off of it. So you just go on FinViz. I mean, I don't have a partnership. We're not making any money off of this. It's just a site I think is easiest to pick up as a beginner, basically. You can type in any company name, but once you know the symbol, in this instance, Snapchat, for instance, will come right up. You can click or hit enter. And what I like about it, you get an immediate kind of profile of what the company is. So the overall sector being technology, and then they always show the subsector being internet, software, and services. If you go down, you'll see before the insider sales, there's a very, very quick paragraph basically about what this company does, when they were founded, how they make money. If you scroll down, you have the analyst actions, which are all color-coded as well, and the date and what they actually did. Current news that's been reported recently, going back a couple months. And then what I really do like, I'll spotlight, is insider trading here at the bottom. You don't want to see red. That means insiders are selling. It's normal for a tech company because the insiders do get issued shares as part of their employment package, their compensation, but you want to see buying. Because that means the insiders truly believe in what's happening rather than selling, because they really have a vested interest at that point in the stock and its long-term performance. So if they're willing to put their money on the line, it's typically a pretty good indicator that they're optimistic about it. It's not a fail-safe. Like, they can be wrong. They're not stock traders, so the timing might not be perfect, but at least it shows where their sentiment is and that they have confidence in the underlying actual business, basically. What I really like about this particular website, FinViz, it does color code things for you. So green is obviously going to be a good thing. Red, not so much as far as the year-to-date performance. Obviously, most stocks aren't doing too well. But you see the target price here is 32 with the current price of 25. There's some pretty good upside. If you eyeball here, starting off just from the top of all the data, you've got the actual market cap, so what the company is worth, what they sell, what they make in income, each year, and then their actual annual revenue. The average for the stock market right now, in general, for the S&P 500, I think it's right around 18 or so, 18, 19. The number one metric I spotlight and begin my analysis for any stock with is the price to sales ratio, which is at 10.2 on Snapchat and 5.6 for Twitter. Because it's the cleanest thing you want to look at. It takes out a lot of the moving parts of businesses and their fluctuations, seasonality, all sorts of complications.
Anything else, or are you just looking at the price per sales, or?
So you want to look, let me go to Twitter here. You want to see growth as well, which is this third column of figures, as far as the earnings per share this year, the estimate for next year's numbers, how they've done in the previous 5 years. Sometimes there are gaps where they just don't have estimates for certain data points. But you want to see growth also in the past, because you don't want to be buying into a company that's not growing. I really wouldn't get into too much of the rest of the data. On that second column, it does mention debt to equity. You don't want to get a company that has a lot of debt, because especially in this environment with coronavirus and all the fears and uncertainty in the markets, a company with a lot of debt might not be able to roll over that debt. And if they can, it might be very expensive. I do like the fact that it'll warn you about the earnings coming up. So that's right here. I do warn most folks to avoid buying in prior to earnings, because you get that volatility afterwards where the stock can move a lot and it might not be in your favor at that point.
All right, Danny, so let's use Snapchat and Twitter to do like a live example of which stock that you would pick, thinking off of these fundamentals, thinking which one would be a stronger buy at the time.
Okay, so just judging by them fundamentally right now, I would look at the valuation metrics. Thankfully, the color coding does come into play here. Well, being that Twitter made $1.87 in the last year per share, and Snapchat lost 75 cents per share, That's a big deciding factor on top of the main thing, which is the price to sales ratio, as I had discussed, being 50% cheaper for Twitter than Snapchat. If you go back further to a real long-term span, you can see that really Twitter has typically found a bottom around this area between $15 to $25 and traded significantly above it several times, where you have a spike near 50 in 2018, and as recently as it looks like last summer, where it got up to $45 as well. So at 25, there's definitely good upside and limited downside, where I would say maybe Twitter gets into the high teens again, 18, 19 at the lowest levels maybe, and starts to climb from there. As for Snapchat, going back further, it has gotten down to $5 before. So percentage-wise, even though it's only $7 lower, that's a huge percentage. You could still lose, 45% almost from here just for Snapchat to get near those lows again. And it's more probable because they're not profitable. In the case of Snapchat, being that they're not profitable, it's more likely that the shares underperform in an environment where there is more risk and more uncertainty. I think without even hesitating about it, I would go with Twitter over Snapchat on this.
Okay. All right, guys. So thanks for watching this video. Hopefully some of that made sense. If you got it this far, please like the video and subscribe. It helps us out and helps us grow. This video is about the fundamental side of analyzing a stock. The next video we'll do is analyzing it from a technical standpoint, what indicators you should have and all that sort of stuff. So we'll get into that next time. Thanks for watching, guys, and see you next time. Want to say like goodbye or something, Danny?
Everyone have a good week and stay safe out there.
All right. See you guys. Stay safe. Make that money.